Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on trading rules, some very important kind of guides to follow when you're first getting started with trading. Again, there's a lot of information out there in the trading world that can be very overwhelming, especially when you're first getting started. So here's just kind of a few kind of tidbits or kind of nuggets to follow. Again, so you'll have this kind of guide to help protect yourself when trading because, again, there's so many different ways that you could do trading. And like I said, there's so much information out there that it can be very complicated. So if you know kind of the ideas or kind of some set guidelines to follow, then you could avoid those fatal traps that end up happening to most traders. So the first thing I want to say is when you're trading, it's you. It's about you. It's not about what the stock is going to do that you pick and what happens to it, right? So there are, I kind of like to explain it to people. There are kind of two, major kind of things to think about when you're trading. There's the technicals, and then there are the emotions of trading. And a lot of people think that, especially when they're new, if they're struggling, they think they have to learn more about the technicals, and that's not true. Again, yes, it's very important to understand and learn the technicals, but it's ultimately about you and your emotions, and can you handle your emotions, and do you have a game plan when trading? So a lot of new traders will end up failing, and they'll think it's because they didn't understand the magical indicator or enough of the technicals, but that's not the case. It's typically usually their emotions. They didn't stick with their game plan with trading, right? So emotions are incredibly important. So again, believe it or not, it's not the market that's out to get you, it's you, right? So the stock market is not out to get your money. Now, there are high frequency computers and all of that good stuff. People want to make money, right? So whenever someone's trading, it is a culmination of buyers and sellers, and somebody wins and somebody ultimately loses. Either they lose money on the trade or they don't make it as much profit as they could. So it's not like the market or some random computer or this mythical creature of the stock market out to get you. It's a culmination, the stock market, of buyers and sellers. There are real people buying and selling, and there are high frequency computers that are out there. The majority of trading is actually done by those high frequency computers. And remember, computers are not emotional, right? They run off of just kind of those facts and data, and they're not biased any way towards any emotions. So it's important to be aware of the computers, but not afraid of them. Again, if you learn the technicals, remember, anytime somebody buys and sells a stock, it leaves a clue on a stock chart. So, a lot of these computers, they'll follow the patterns, but if you learn the patterns, you can end up kind of carving out your own niche in the trading world as well, because those computers, when they're buying and selling, they can't hide it from a stock chart. They might get in quicker or get out quicker on the security than you. However, those clues are left on the chart. So again, it's very important to learn the technicals, but don't rely solely on them. So meaning you have to understand it's your emotions play a part too. So you can think something is there when it's really not. Right? So you can think, your mind can play tricks on you and think, oh, the stock's going to go up, right? But meanwhile, the technicals might be saying something different, or vice versa, right? You might want to hold a position longer and not realize that the stock is actually going to go against you. That's why your emotions come in very important, as well as the technicals. So let's go over a few of the trading rules, and then I will break them down. So first one is patience. All right, it's one of the hardest ones. A lot of people have that FOMO, the fear of missing out, and they don't have patience. And so patience is incredibly key. No chasing, so don't chase a stock. If it's running up, don't chase it. Do not gamble. Again, a lot of people will say, you'll hear people say, if you're getting into the stock market, hey, don't do that. Don't do stock trading. It's gambling. Just invest. Put your money in whatever stock like Apple or in your 401k. Just don't do that gambling, that day trading stuff, or trading in general. That's just a gamble. You don't know what a stock's going to do. And that's a bunch of baloney. In theory, it sounds good, right? It sounds like a right thing to say, but it's not true. Like with anything with trading, once you learn a skill set and proper risk management, it's not gambling. Now, do you know what a stock's going to do 100% for sure? Absolutely not. However, again, if you put your plan in place and you are consistent and you have proper risk management, then it's not a gambling strategy. But if you're new and you're just kind of just thinking, going blindly and putting your money places and not following proper protocols and trading risk management, then it is a gambling strategy, right? So, or it's gambling. It's not a strategy. So again, also don't stick to only one indicator. So, but at the same time, don't use too many indicators. So you want to have a balance. Indicators are more of a guide. So nothing is foolproof in the stock market. So sometimes having a couple or a few are good to have to help confirm a trade, but you don't want to rely on them solely. And then one of the most important ones is follow the strategy that suits you best and always stick with your strategy. So let's talk about patience. Don't enter a trade too early. So that's easier said than done, right? When the action's happening, you see that stock running up, it's so easy to want to just jump into that trade. But you want to be able to kind of control your emotions and wait for confirmation at support and resistance levels, right? Support is where you want to buy low and resistance is sell high. So buy low, sell high. Problem is a lot of new traders, they're not waiting to get a good fill. They're anxious. They try to get in the trade too quickly, and then they end up buying at resistance levels or top levels. So they're buying high and selling low because they're just not following their trading strategy. They're having FOMO. They're trying to enter too quick, and they're not watching for pullbacks to support levels. So avoiding FOMO saves your account. I can't stress that enough. Again, you want to learn the technicals, but very important is controlling your emotions. And if you can't find, a stock, or if you don't get an entry on the stock that you want to trade, find a new trade. And that brings me to do not chase. So don't chase a stock as it's running up. So if the stock is running up, again, watch for pullbacks. Too many new traders buy at top levels, especially if they're following a guru or a chat pumping service. It's very easy for gurus to buy and then sell to their followers, right? If you're following a guru or chat room service that is acting like I call them brokerage account heroes, right? They're posting thumbnails about how much money that made that day. Well, that's great. But at the same time, if they have hundreds, if not thousands of followers following into them after they get into their entry, it's very easy for them to get in and then sell, and many times they're selling at top levels to their followers, right? And then the stock dumps on them. So that's, they got to be careful about those pump and dump services that are out there. So again, you want to watch for pullbacks and reversals. So when a stock runs up, watch for it to pull back to support levels and show confirmation. Then look for a potential entry. And if you can't get an entry, then just look for other stocks if you miss your entry. Again, there's always another trading opportunity. So good old gambling saying, right? So everybody tells you that if you're new, that trading is gambling. Again, it's not if you have your proper risk management strategies. Set a stop loss. However, we recommend mental stop losses, because if you just put a stop level into the system, you have to be careful of the market makers triggering stops. A lot of the brokerage accounts will say, oh, no, they don't do that. Whether they do it on purpose, whether they can see your orders in the system, or whether they just know where new traders set their stops, of course they're going to trigger your stops to get your money. And then that's why a lot of times, again, traders will get in, they'll set those stop loss too short. Stock will drop down, hit their stop, and then it'll go and rip. So that's why it's very important to learn trading first. Obviously, know what you're doing, practice, and then if you can't do a mental stop, then set a stop loss, but give yourself a little bit of a buffer. And we can't stress it enough. If a trade goes against your trading strategy, make sure you cut your losses. So let's talk about indicators. You'll hear a lot of, especially when new traders come in or just following other traders, you'll see everybody's chart is different. Some traders have a lot of indicators, some have a few, and then some have none at all. So traders are good, or I'm sorry, indicators are good, but they could also be bad. So if you're using indicators, don't rely on just one. Also, don't rely on any of them in general, because multiple indicators, they can help confirm a trade. However, they're not foolproof, right? So don't go on indicator overload. Use them as a guide, but it's very important to remember that most trading indicators are lagging. They're lagging indicators. Price, action, and volume, learning candlesticks, patterns, and volume, those are the most important indicators, but things like moving average lines and stuff like that, MACD, those are lagging indicators. They can be helpful, but they can also play tricks on your mind if you're not careful. So again, no indicator is foolproof. I wish I could tell you something easier, like, oh, trading, here's this perfect indicator and it's foolproof. Well, there's nothing out there foolproof in the trading world. Again, you're up against high frequency computers as well as people with real emotions, right? So, something you could think a stock's going to do something, and then somebody on the other end does a stupid trade, or right? Maybe they put in an order that was wrong, an error, and they buy too many shares or sell too many shares, and then the stock drops or goes up, whatever inverse of your strategy is, off of somebody making a mistake. That stuff happens all the time as well. So again, there are no foolproof indicators in the stock market. Following your strategy is incredibly important. Always follow your strategy, right? Never break it, because again, this is where your emotions could start to play with you. And we like to say hope is not a trading strategy. So if you hope a stock is going to do something or go your way, it's not a trading strategy. Best off to just cut your losses if the trade goes against you or if you miss your entry. It's just, again, this stuff happens all the time in the stock market. Even the best traders in the world fail, 30 to 40% of the time. So you got to get used to cutting your losses, and it's important, again, make sure your wins outweigh your losses. And how you do that is by cutting your losses so that you keep your losses small and then you let your winners run. So if you're new to the trading industry and you need more help, we have some free courses on our website at bullishbears.com. We also have trade rooms to help our followers, kind of see how to do trading live. We have futures, day trading, penny stock, swing trading, options, all of that good stuff. So check us out. Our website is bullishbears.com, or the link will be below. And as always, if you like this video, give it a thumbs up, subscribe to our channel, and we'd greatly appreciate it if you share this video out with others. We're always doing our best to help provide good content to others out there in the internet world. So again, hopefully this video helped you, and we will see you in our community. Enjoy.